So the S&P doing well this week and a great May. Investors are bullish. They are not. In our calls and Zooms with portfolio managers, many are still cautious because they see tariff risks ahead and they don't have tariff resolution in hand and they can't get bullish. I think the feedback we get from a lot of folks is they think stocks shouldn't be rising. So I would say, given the amount of cash on the sidelines, the fact that short interest is going up, and we have a quiet week and markets are rallying, I think the risk is now of a substantial leg up rally from here.
Brace yourselves for an explosive market surge, a melt-up rally, as boldly predicted by Tom Lee, co-founder of Fundstrat and a highly respected Wall Street strategist. Even with the market constantly on edge due to tariffs, political gridlock, and a shaky bond market, Lee stands firm in his belief. The next big move is upward, and most investors aren't prepared for it. In his latest interview, Lee completely dismisses the current atmosphere of fear. He views alarming headlines about rising loan defaults, housing market slowdowns, and weak spots in consumer credit as mere temporary distractions, not fundamental dangers. What's even more crucial, he points out a significant disconnect. The stock market is climbing, yet professional investors are playing it safe, holding on to too much cash and increasing their short positions. This, he states, is precisely the fuel needed for a major leap forward. Why is this so important right now? Because we're at a pivotal macro moment. Inflation is cooling down, interest rate cuts are back on the table, and despite all the chatter, the economy continues to defy pessimistic forecasts. With plenty of money waiting to flow back into the market and a gloomy mood still hanging over investors, this creates the perfect storm for what Lee calls a melt-up. A rapid, unexpected upward rush driven by investors quickly changing their positions and the fear of missing out, or FOMO. So, where should savvy investors focus their attention next? In this video, we'll reveal 3 top stock picks that align with Tom Lee's optimistic outlook. These are companies set to shine as big institutional investors jump back into riskier assets. We're not talking about risky bets here. These are solid businesses with real momentum, the power to set their own prices, and significant growth potential in today's economic climate. Let's dive in. First up is AppLovin Corporation, ticker symbol APP, a company that has completely revolutionized mobile advertising. Once seen as a mix of ad tech and gaming, AppLovin is now emerging as a focused powerhouse in AI-driven advertising infrastructure. Their first quarter 2025 results were truly remarkable. A 71% jump in ad revenue year over year powered by their cutting-edge Axon 2.0 engine, and an impressive 81% EBITDA margin in their advertising segment. These aren't just good numbers, they're better than almost every other major player in the industry. What makes AppLovin stand out is its comprehensive AI-native design. They don't just serve ads, they build the very foundation that fuels modern mobile marketing. Through their real-time bidding engine and mediation layer, AppLovin gives advertisers unmatched precision, speed, and clear results, all under one unified system. This level of control is absolutely essential in a post-cookie world where privacy, compliance, and data quality are key to success. The company's smart move to sell off its slower-growing app business further streamlines its model and hones its focus. This isn't a retreat, it's a strategic pivot towards highly profitable, high-growth infrastructure. And with the upcoming launch of a self-service ad dashboard, AppLovin is stepping into a new era of scalability. Perhaps the most exciting part of this story is the timing. The ad tech industry is at a major turning point, moving from a jumble of separate tools to unified, intelligent platforms. Advertisers are hungry for automation, transparency, and a clear return on their advertising spending. AppLovin ticks every single box. Its strong performance, innovative product pipeline, and growing adoption make it one of the most thrilling names leading the next wave of AI-powered advertising. In a market desperate for efficiency, AppLovin isn't just participating, it's blazing a trail. Did you know that AppLovin actually started out making mobile games before pivoting their focus to the ad technology that powered those games? This deep understanding of both sides of the mobile ecosystem gives them a unique edge. Real quick before we move on, if this is hitting the mark for you, drop a like and hit subscribe. It really supports my small channel. And hey, if you're thinking about retirement or investing in gold, I've got a free guide on gold IRAs linked below. Stick around, I'll go over why it's useful at the end of this video. Next, we have Arista Networks Inc., ticker symbol ANET, a company quietly driving the AI revolution from behind the scenes. While it might not grab headlines like its massive partners, Arista has built an incredible high-performance networking empire that has become absolutely essential for tech giants like Microsoft and Meta. With almost half of its revenue now tied to AI infrastructure, Arista is perfectly positioned at the crossroads of two monumental trends: cloud computing and artificial intelligence. At its core, Arista designs and sells incredibly fast, scalable networking switches that power the data centers of our digital economy. But what truly sets it apart from other hardware companies is its proprietary EOS operating system. This sophisticated software creates deep connections and customer loyalty, allowing huge cloud providers to manage increasingly complex AI and cloud workloads with incredible accuracy and security. In a world where every millisecond counts and efficient data transfer is vital, Arista delivers both at scale. The company's financial health is nothing short of exceptional. It's completely debt-free, boasts profit margins over 40%, and generates a return on invested capital exceeding 27%. That's the kind of operational excellence that builds strong, high-performing companies. Despite a recent dip in its stock price, Arista consistently beats earnings estimates with remarkable regularity. In fact, it has surpassed analyst expectations every quarter for the past 4 years, averaging a 12.5% beat. While some forecasts suggest a slowdown in earnings per share growth in the coming years, that might be too conservative. With the global AI market expected to grow by over 25% annually throughout the decade, and Arista already deeply integrated with the world's biggest AI spenders, the company could continue to outperform even modest expectations. In an environment where investors are searching for legitimate businesses with strong profit margins behind the AI boom, Arista truly shines. It's not chasing fleeting trends, it's building the fundamental infrastructure. And as the demand for faster, smarter infrastructure accelerates, Arista looks perfectly poised to deliver. Finally, let's talk about Dell Technologies Inc., ticker symbol DELL. A name many people still link to personal computers, but one that has quietly transformed into a critical player in the AI infrastructure race. If you still think of Dell as just a PC manufacturer, it's time to update your understanding. Under the visionary leadership of Michael Dell, the company has undergone a dramatic transformation. Today, Dell is no longer defined by laptops and desktops, it's defined by the AI factories and high-performance servers that power our data-driven world. The momentum is undeniable. In the first quarter of 2025, Dell's Infrastructure Solutions Group, the division responsible for servers, storage, and networking, reported a 12% year-over-year growth, significantly outperforming the traditional PC division. And within that, server revenue hit a record $6.3 billion, with demand for AI-optimized systems actually exceeding all of their fiscal year 2025's shipment capacity. What makes Dell especially compelling in this AI cycle is its powerful partnership with NVIDIA. Together, they are building the essential framework for AI factories, purpose-built data centers designed to train and deploy AI on a massive scale. And Dell, with its decades of expertise in managing complex supply chains, is perfectly positioned to deliver these solutions. Yes, profit margins remain tight. That's always been the reality in the hardware business. But Dell excels in execution, scale, and consistency. Even with slim margins, the company returned an impressive $2.4 billion to shareholders last quarter alone. This is a business that steadily grows over time, leveraging stable cash flows from its PC business while aggressively investing in next-generation infrastructure. As AI moves from experimental stages to widespread industrial deployment, companies like Dell, with their massive scale, proven reliability, and strong ecosystem partnerships, become absolutely indispensable. It might not be the flashiest name in the AI race, but it could very well be one of the most reliable. For investors looking for a lower-risk, long-term way to ride the AI wave, Dell offers a rock-solid foundation with built-in potential for future growth. As the AI revolution gains speed, the market is fundamentally changing, and the smartest investors are already adjusting their strategies. From AppLovin's clever algorithms in mobile advertising, to Arista's vital role in high-speed data networks, and Dell's robust infrastructure for AI, these companies aren't just following trends, they're actively building the future. Each is uniquely positioned to thrive from the next wave of digital transformation, offering practical utility, strong performance, and scalable growth. If Tom Lee's prediction of a melt-up rally is accurate, then these aren't just good stocks, they're strategic power moves. The stock market's been jittery lately, and when uncertainty rises, history shows us where smart money tends to go: Gold. Central banks' demand for it last year alone reached a record high, and spot gold just surged past $3,300 an ounce. And recently, it has surpassed the Mag 7 as the most crowded trade on Wall Street. If you're thinking about ways to take advantage of gold in your investments, I found a company that gives Americans a free guide on how to add real physical gold to their retirement portfolio in a way that's simple and secure. No sales pitch, no pressure, just honest, helpful information you can trust. Click the link in the description to get your copy now, because when the biggest financial institutions in the world are quietly stockpiling gold, it's not just a trend, it's a signal.